Hello, welcome back to Amillex AI Analysis. Right after the release of U.S. November non-farm payrolls, gold price went on a roller coaster ride. The price first surged, then sharply pulled back, and that reaction actually tells us a lot about how the market is thinking right now. According to the release, U.S. NFP rose by 64,000 in November, beating expectations of 50,000, showing a significant improvement from October's negative 105K. On the surface, that looks supportive to the U.S. economy. But there's a twist. The unemployment rate climbed to 4.6%, up from 4.4%, and higher than what markets were expecting. That's the highest level since 2021's COVID-19 repercussion. Job creation was decent, but unemployment rising raised concerns about underlying labor market stress. A lot of people might be curious. How can employment rise while unemployment also goes up? The main reason is believed to be higher labor force participation. More people started looking for jobs, which increased the total labor pool. The denominator got bigger. On top of that, many of the new jobs were part-time or temporary positions, not a full-time employment. Thus, there might be some double counting in employment data for a single person, which can exaggerate data strength. Looking at the gold price since the release, it initially spiked to around $4,335 from $4,290 as traders focused on the rising unemployment rate that raised hopes for future Fed rate cuts. But as the market digested the full picture, robust job growth, resilient retail spending, and no clear sign of economic collapse, expectations for aggressive Fed easing cooled. That's when gold pulled back sharply, dropping back to $4,290. From a technical perspective, $4,330 appeared to be a strong intraday resistance, while there is building a higher low uptrend intraday support since the pullback toward $4,290 level. As long as gold holds above this support area, the upside momentum structure remains intact. However, for the upward trend to continue, gold prices must break through the December 12th high of around $4,350. Once this high is broken, gold prices will further test the all-time high of around $4,380 and may then target key levels of $4,400 and $4,450. Eyeing the upcoming release of CPI figures and initial jobless claims on Thursday, ahead of the PCE data on Friday, they will likely decide whether gold breaks higher or stays range-bound in the near term. This market update is brought to you by Amillex AI. If you find this breakdown helpful, stay tuned. Markets are about to get even more interesting. See you in the next breakdown.